Welcome into the bunker. Today I want to talk to you guys about some of the riskiest assets, biggest assets, actually. We're looking at the largest assets by market cap in the world. And we're going to look at basically all of the top 10 charts besides Berkshire Hathaway and Saudi Aramco. And I want to show you guys what is happening here on all of these charts, essentially, gold and silver notwithstanding. Let's take a look at first Apple, because that's the largest equity asset. Some of these charts are literally the worst looking charts I've ever seen in my life. So I don't want to be soft when I come in about this, but these things are putting in what I would say is the definition of a gravestone doji, similar to what we saw here on Apple, we're seeing here, but even playing out more perfectly. So we're also closing, and these are all on a weekly basis, because I just want to show how much room we have to go down from here on some of these. And I just really want to focus on the charts because I think they tell the full story of what is happening in the world, in markets, in our economy. And, you know, I have focused on other things, but right now, let's just focus on the charts. With Apple, I mean, look how much this has gone crazy. Okay. And the reason it's gone crazy is because of Fed monetary policy. There's no doubt about it. People are able, you know, easy money is throughout many different aspects of our economy. And it flows into real assets. It flows into people buying many different new iPhones, you know, new gadgets and things from Apple. But as we can see, we did use the 20-week SMA as support throughout this entire bull. We broke below it, and now we're still closed above it. So I do want to say, you know, I guess it is key to see us go below this. And this is coming from someone who is a bear. So I'm looking for this to go lower. Obviously, that's my bias. You may have your bias towards something, and we might all have a bias, but that's why I'm here. I want to be honest with you guys about what I think, and I want to be patient, and I want to try to make people money. That's the basis behind what I try to do. So there's really no other purpose for me. It's not like I'm making any money off this. I just enjoy it. So where could we see us come down to? In my opinion, none of this is financial advice. I did just buy some puts, and I'm looking for this high that we put in here. And the COVID rally highs. This is when all the monetary policy came in here, right? All that printing. So what I want to see is us come back to that level. I think it's a psychological sort of thing as well, just to see us come back to the level that we put in when we printed all that, right? I mean, I think that just makes sense. For me, I put it at 135. I believe by the time we hit that, we could also have a support from the 100-week SMA, which right now is at 132. So my put, obviously none of this is financial advice or, you know, saying that you should go do this. But I did buy May 20th, 2022 puts on Apple for the price of 135. And I think that, you know, it's not even really too much to ask. As we can see, when you want to accumulate a stock, you want to accumulate when it's very skinny in nature in the moving averages. Right now, we're super wide. We haven't put in a cross at all. Okay. So we still have yet to come, most likely, a cross here that will put us, you know, that will sort of drop us lower, just like we've seen in Bitcoin recently, you know, that we had that cross. And we will take a look at Bitcoin quickly, even though we looked at it last video. Let's look at Amazon. Okay. Amazon has now just come up, touched this trend line, and then gotten rejected. And once again, what kind of candle are we seeing? A gravestone doji at the top. We can, which just shows how much the bears came in here. We're making a lower high, just like an Apple. We're coming down and making a lower high. And Amazon isn't a company that, even throughout the past year or so, or 2 years really, since COVID, it put in one big rally after the COVID lows, and then just kind of went like on this trend line here, nothing crazy. And then we broke it, and now we're testing back, and we're gonna break that. We're gonna break that down. I don't have a put on Amazon. I wish I could. They're a little bit more expensive, so I didn't end up doing that. But I'm using the biggest sort of assets as like a proxy for Amazon. But if I had to choose, obviously I would look at the 200, even though I mean, I think we could even break that, which is pretty crazy to think. But this is one of the stocks that actually did have a cross here. So we did see a cross of the 20 and the 50 here, which led to this sell-off and then this rally on the news that Amazon was doing a stock split. This is a classic bear market rally, in my opinion. And we're seeing this sort of complacency play out here. And I do believe that we're headed lower. I do believe that you could get a test of this. I guess I would say, yeah, look for the 200 SMA. I mean, it's nothing crazy, but 2,500 would be an easy target. I do think we could come down to test these levels at like 2,000. So we'll see what happens there. Taking a look at Microsoft, let's just look at the assets. Microsoft is actually the second biggest equity. So a lot of people think that it's Amazon or maybe even Google, but it's actually Microsoft. So again, putting in similar type gravestone doji, it's not fully down there, but we did get rejected pretty much by the 20 SMA, which again held us as support pretty much since we made it support here after the 2020 March 2020 crash. And so for this one, yeah, I am looking to again come down to this 225 range, which is again where we rallied up to during COVID. And yes, that's kind of the puts that I have. And again, these are May 20th 2022 puts. So I'm basically betting that those stocks will come down to at least that level by then. And so it's not a direct short where I'm actually losing money. I have to cover my short and I'm like buying someone else's long. That's not how this actually plays out. So it's a little bit less risky than buying a short. We do again see, I mean, just how nuts. I mean, I think that Microsoft is probably the prime example of just how nuts this has gotten. Look at this on the weekly and look how parabolic this has gone. I mean, you just have to be out of your mind. And then the fact that like this entire trend line since like a year ago or whatever has just gone straight up, and now we're coming down and we're kind of retesting it. And then, I mean, these things could easily come back to the 200, which at that point could be like, $200 down here at this low, or even maybe this top here at 184. I'm playing it a little bit safer. And, I don't think you actually have to sell if they go lower. I do think we're going into a recession. We had the 10-year flip with the 2-year. We had the 5-year flip with the 30-year. Two, very prominent signals for us to go into a recession here. So again, just look at what monetary policy easing has gotten us since 2008. And we just see the relentless pump of this market, which just is a magnitude that I don't think any of us can comprehend. Let's take a look at Google. This is a similar pump to Microsoft and just how crazy this has gotten. Obviously, again, putting in this type of candle here, not exactly the same, but similar gravestone doji. And when these big boys come down, there's really nowhere else to hide, and so I do think that this money will flow out into dollars, obviously. which is a short-term sort of play on the dollar. But I do think eventually that money will flow back into gold and silver, because those have just not performed. And so you want to sell something that has overperformed and buy something that has underperformed but is undervalued comparison to the money supply, the risk that is happening in the world, and many other things. And so again, we can see this trend line that has come out and now played out again, and is making another lower high. So we just have a series of lower highs, and obviously, if you're looking for, a put, I would say, around 2,100, 2,000, somewhere around there would be a good target for that. Again, I wasn't, I did not buy Google puts specifically, but I have a Tesla put, which is probably the bell, the basically the horse that everyone has ridden up in this bull, the bellwether, I guess, as you could say, for this raging bull market. And so if we're going to get another chance at this, I'm going to go at that. This stock is completely overvalued based on just the company itself from everything that I've heard. And so I'm going a little bit farther on this one. I'm going to target actually around, I believe around like 550, 525, I think I put. So this high here, somewhere around 510 to 525, which again is like a 50% loss from here. But this thing is just out of control. It makes no sense. Again, we're wide on the averages. We haven't even crossed over yet. People somehow acting like this economy is the same. You think that people are going to go out and buy Teslas when their house is dropping in value by 25%, based on the raising interest rates, when their other risk assets, their IRA is cut in half, when things start to happen in the world that weren't expected, supply chains, obviously, all the commodities that go into Tesla being costing more, electricity costing more for people to buy a Tesla, and who's even commuting anymore? I mean, it's basically a luxury vehicle. So I'm not sure. I don't see people buying luxury vehicles as much in a recession. So to me, this is the most obvious one of them all. You could definitely even go for this like 200, in my opinion. I just kind of was like, okay, 50% from here is easy. So I'm going to go for that. I also did SPYs. This is one that I think is probably the most obvious and really the first official sort of gravestone doji that we've put in on the S&P, which is looking really nice here. So we can now form our complacency leg trend line, in my opinion. And so all we need really is to just hold this as resistance, and then we'll sort of keep finding our way down. Again, I like this area again, like 350 for a put, which is again where we rallied up to after all of the printing. And so I think that just makes sense. And there's really not much other support, once we lose this low here. I think it's pretty obvious it would come down to those levels. And again, just putting in, even the index is showing the sheer insanity of what we've experienced over our lifetimes with the printing since 2008 is just it's just crazy. And that was all because of monetary policy and easing and manipulation of markets with free money. So what are some things that maybe we can look to other than dollars is gold. Gold has sort of, I would say, formed a perfect cup and handle here. So we have a rally up after 2008. We have obviously a brutal bear market where stocks and volatility was low and stocks were high. Once we started to see an uptick in volatility, we started to see gold. And then obviously with the monetary policy We saw gold rally up, and now we have a bull flag formation series of higher lows. We have the moving averages moving closer together in an accumulation pattern, and we have massive volume coming in there on a breakout of this wedge. And then now we pretty much have the testing back. I would not be surprised to test fully into these moving averages, which are all sort of consolidating. So I look for, possibly coming back to like 1850 here. And I wouldn't be surprised. But I also wouldn't be surprised if we use this as sort of a trend line to now go higher from where I expect us to go to about 2,600 to 3,000 as we experience major stagflationary pressures, food inflation that will, be pretty insane. I think that people will look to classical inflation hedges, flights to safety, real assets that you can hold in your hand. When paper markets are blowing up, you definitely want to hold real things. And that will also bring me to silver, which is even, way more undervalued than gold. If we look at it on the weekly, we can see that it is also sort of formed this crazy sort of cup and handle. It's, right now I would say that this is the trend line that I looked at, and we're still sort of like we're not really having that as support. So silver's a little bit riskier. It's more of a longer term play. If you want to, have a bet on not only being sovereign with your money, holding your money in your hand, but also betting on clean energy. This is something that needs to be used in clean energy. And so on a breakout of a major inflationary spike with a, stagflationary environment, I'm looking for silver to as at least a $50 target. And for me personally, I will definitely be looking at this 1618 level at $77. So, we went through the assets here that are on the list of the largest assets in the world. Let's take a look at Bitcoin to finish us off here, and then we can finish the video. But again, what are we seeing? Similar thing. And you do not want to be correlated right now to the stock market. And I think that Bitcoin is, it's correlated to some of these indexes. And, it obviously, sort of got like a random, I think that Bitcoin is sort of an interesting thing, because again, if I'm not being biased towards my bearish case, I am thinking, okay, is Bitcoin an asset that world populations are going to run to in an inflationary environment? It's possible, yes, and I think people are, but with the risks that are involved in the world, you don't want to be all in, right? You want to have a portion of it in your portfolio in this certain environment. And, but I just do not see us really moving into like an all-time high scenario on Bitcoin. And so again, I do think if we just look at it on the daily as well, we did get rejected here. We did put in this nice rally, obviously since I made my last video when it was like 45K, for some reason, Bitcoin is bouncing. So again, this could be a development that I'm not picking up on, but I do still look at it as something that has never not gone into a bear market after the weeklies cross. Okay. So again, we have the March 2020 cross there. It's only crossed a few times. Okay. So we have the cross here, dump down. Okay. And then we also have the cross on this 2013 rally, cross here, dump down. Okay. So what Bitcoin would have to do in this scenario is go against, what it is telling us basically. And again, look how wide we are here. Is this somewhere where you want to accumulate up in this range, like in no man's land here? I don't think so. I I'm looking for lower levels. I'm looking for 20K to 26K. So we'll see what happens. Try to keep you guys updated. Hopefully you got something out of the video. If you did, please like, subscribe, and have a great day.